Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, the news that moves the markets. And the question is it the news moving the markets as gold yesterday breaks above 1,600 and sitting there? And we have been saying, anytime, or at least I often say, anytime you get a move above somewhere, you definitely want to see a close. We got our close, and gold is still up even further today. So Wednesday recording here, 1612 on the gold price, and testing the prices from the first week of the year during the Iranian assassination of Soleimani. So we're seeing those prices again. Now the question is, does gold continue? Do I ever get my 1485 pullback? Or are we just pushing up into higher pricing? So Eric, what do you think?
Well, we spoke about this. I don't remember exactly when Soleimani assassination was, but we did break above that 1600 level, but only during the wee hours of the night, right when this attack happened. Exactly. And then quickly retraced, I think even the next day, right? We dropped back down into that mid 1500 range. This one a little bit different. We've got a shortened trading week. Monday, the markets were closed. Tuesday, you had some kind of amped up coronavirus worries, if you will. Apple came out, said they're not going to meet their quota for this quarter, and you've got some more pressure building up on these corporations who do a lot of business in China, because it seems like it might be a little bit worse than we originally thought, but nobody really knows because misinformation everywhere. That being said, Miles, we got our close above 1,600, as you alluded to, pushing 1,612. What are you seeing develop in the charts?
Well, I know we're bumping up against that old high from earlier this month, but where I am optimistic here for a couple reasons. I mean, if you look back to the 2013 highs, we still actually have a ways to go before we hit what you could argue would be resistance. Now, we're talking 7-year-old resistance, so don't know how many standing sell orders you would have from 7 years ago sitting at that pricing, but that doesn't mean they're not there. So more realistically, it's new money coming in, looking for previous price levels to possibly short the market or take profits. So that last little bump before we established the bear market back in 2013, that last little bump takes us up to around 16 and a quarter. And then the previous floor, another $15 or so above that, that I've got shown on the chart here. So I think we could see gold step up a little bit further. Second reason for that is just how the price has acted over the last couple weeks since we hit that 1612 number back the first week of January. We never put in a lower low. So we had the initial run up. Like we talked about, I believe last week, it's not unreasonable to see price reverse and turn back down when you hit these psychological price levels, these 00 levels. People say, hey, I bought it at 1,200, I bought it at 1,300, it's at 1,600, let's sell, let's take some profit. So it's not unreasonable to see it turn around, but the reality is it never really turned around. I mean, by the 13th, 14th of January, we had come back down to the mid 1,500s. But then we've started stair-stepping up from there and never saw anything but higher highs and higher lows. And the way it's come in and closed above 1,600 and now bumping up against the high from earlier this year, I think we are going to step up and go ahead and test some of those actual price resistance levels set many years ago during the tail end of the previous bull market. So doesn't mean we don't at some point see a correction. I guess eventually I'll have to get up. When we're at like $5,000 gold, I'll give up $1,485 as a turnaround point, which may happen at some point or not. Now it looks like. But I wouldn't be surprised to see gold push up again tomorrow, Thursday, when we post this. So by the time you're hearing this, it wouldn't surprise me to see higher prices at that point. And then give it another $10-$20 and we'll see what we do from there.
Well, Miles, moving on to silver, you've got gold putting in these newer highs since 2013. So we've got 6-year highs getting put in with gold. Silver, not really the same. The ratio is still at about 88-1, so it's moving up, but in unison with gold. We were looking for silver to really start outpacing. Haven't seen that yet. As we record today, silver is at 1850, so a nice little move up, but nothing aggressive like we've seen in the past. Kind of the same thing with platinum. Platinum's still just, $1,010 today as we record. We've kind of been in that range over the last 6 weeks, I'd say, breaking above 1,000, getting a little bit of traction, and then back down into the 900s, and then back just a little over 1,000 back into the 900s. Are you seeing anything positive developing in those charts that show you a breakout for either silver or platinum?
I mean, you have a short-term breakout in both, right? You've got short-term compression pennant pattern building in both the silver. Silver was a downward sloping pennant, which usually argues a breakout to the upside. Platinum had been really just sideways trading throughout the course of this whole month so far. But you have had short-term breakouts in both of the metals. So that is very optimistic to see. Now, it doesn't necessarily mean anything until you go out to the medium and the long-term charts and you start to see us putting in some higher highs and higher lows there. So both metals still have a little ways to go. I mean, platinum coming in even just at the beginning of 2020, another $20-$30 higher than we're at now. That's not hard to hit. When you're at $1,000, $30 is 3%. So big deal. That can happen in a day or two. So if gold continues up, yeah, I think silver, platinum come with it. We could end up seeing some shorter medium-term highs. Platinum maybe $1,050, $1,100. Silver, boy, I'd love to see $20 again on silver if we're going to continue to extend the bull market right now. So I know last week I talked a little bit about the sell-off concept because it always makes me nervous when prices only go one direction. And for a while, especially in gold, prices only gone one direction. So anytime I'm talking about potential pullbacks, like I know Tori has mentioned a number of times in shows through the years, what we're looking for is for the established gold investor who already has a solid position in metals for the real reasons you own gold: preservation, security, privacy. For the established gold investor to be able to step in and add to positions, increase ounces at these pullback prices. However, if you're not an established gold investor, you don't want to miss the opportunity anytime to at least build a baseline position. The reality is as long as the government keeps spending more money than they make, I'm going to keep buying gold.
Well, Miles, I think most of our listeners do know, the real reasons you own gold. It's a lot more simple than the reasons you own, say, platinum or palladium. I think we have to mention palladium again this week because it's sitting at about $2,770. So pushing $3,000, maybe we'll break it, maybe we won't. The biggest difference is the ounces you can compound if you had palladium right now.
Right. Could you imagine if that platinum-palladium ratio gets to 3-to-1?
Exactly. Or the palladium to gold ratio at 2-to-1.
Right.
So everybody knows the simple reasons why you own gold, right? It's your hedge. You made the great point of as long as the government keeps spending more money than they make, you're going to keep buying gold. Palladium, we've mentioned numerous times now being parabolic. It's just going straight up Bitcoin-y. Do you see it continuing to go? Do you have any indications?
Well, the last move up, one of the things about these parabolic moves is, and Bitcoin's a great example of it, generally when you have a move ad infinitum or as close to infinite as you can get. But if you have one of these emotional moves that's caused by speculative emotion, you usually have a pretty rapid reversal immediately following. I mean, gold did it in the end of the gold bull market, went from 19 to 1600 pretty quickly. Then it kept trying to get above 19 and failed and eventually turned bearish in 2013, 2014. So Bitcoin obviously did it. We're at 20,000 and then we're at 12,000 pretty soon afterwards. So when we saw Palladium run up here a month or so ago, hit 2,400, the immediate response is let's see how quickly it reverses, and it didn't. So we took a stair step up and then we traded sideways for a few weeks. Now we've taken another or started to take another. I mean, we'll know over the next few days if Palladium's up another $100 tomorrow and another $100 on Friday. We're still parabolic. But eventually you do hit a peak on a particular move. And then the question is, how does it respond from there? Do you get a massive sell-off at that point and a $300, $400, $500 drop or not? And I don't know if it necessarily has to happen. I mean, if we're expecting all the metals to go up, you look at how rhodium has moved. Mm-hmm. If you're looking at all of these metals as a cluster, there's no reason why any one of them can't lead the charge. We've been talking about the last few months how gold is leading the charge percentage-wise compared to silver and compared to platinum. But the platinum group metals, palladium, rhodium, iridium, are really leading the charge against everything else as an entire cluster of precious metals. So there's no reason why palladium has to collapse in price in order for your ratio trading, your compounding ounces strategies to work. What ends up happening is the rubber band snaps and platinum just plays catch up very quickly.
Yep. Just real quick before we close, Miles, I'd love for you to touch on the equities markets. We've got another one of those periods
Speaking of government spending.
Exactly. But another one of these times where you've got the dollar moving up, the equities moving up, and the metals moving up, which a lot of people don't think should happen or could happen. Frequently when I talk to my clients and I've told them, gold's up, 40% in the last 2 years, they say, well, how's that? Because the Dow's up as well. And it's not an inverse thing always. But what are you seeing going on in the equities markets and with the dollar this week?
Well, you have an absolute collapse in the euro. I mean, the euro currency is down pretty substantial. The euro index down from like 111 to 108 just in the last couple weeks. Pretty massive move for a currency in a pretty short period of time. So euro concerns, Brexit involvement, all these markets are related to each other, and all of these markets, obviously, money's got to go somewhere, and it's money coming out of Europe, obviously money coming out of Asia, with the coronavirus and the issues going on with China, Baltic Dry Index and shipping lanes and everything else getting shut down. I know you mentioned Apple's report a couple days ago, just pre-warning everybody, hey, if we can't ship iPhones out of China, I don't know how you guys expect us to sell anything. So just be aware. Crisis overseas. People are going to stuff money in the banks, and internationally, U.S. banks still hold quite a bit of power. So just circling the wagons, so to speak, and that's international money coming into the U.S. markets. So on the heels of these metals moves up, it will be fun to watch how the markets translate this information over the next week. Looking forward to next week's show, maybe as much as I did this one. Always fun to talk when the gold is up. Will be more fun to see how that plays out in the market. So thank you for joining us this week. Looking forward to you joining us again next week. As always, if you like what you heard, hit the subscribe button, ring the bell, join us in the comments. If you'd like to discuss your personal portfolio with us or one of our fellow advisors here at ICA, you can call us at 800-525-9556. And you can find more information off of our website, McElvaney.com, Twitter, ICA Gold, or Facebook, McElvaney Financial. Thanks for listening.
Have a great week.